Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in this week's technical analysis video, we're going to analyze two stocks that are ready to give 12 to 15% kind of move in the short term. Before going into the video, standard disclaimer, I'm not a SEBI registered analyst and any stock discussed here is not a buy or sell recommendation. Please consult your financial advisor before taking any trade. So the first stock we're going to take a look at is Apl Apollo Tubes. So let's go down to the weekly time frame and let's analyze the broader trend first. So as you can see here, it has been in a strong uptrend since the March COVID lows. This was formed back, it made a low of around 100 rupees back in March 2020, and since then it has been rising consistently, and right now it's currently trading at 1000 rupees plus. So from 100 rupees to 1000 rupees it has given almost uh, 900 900% return since then. And if we take a look at the high that was formed back in 2018, since then it has given around 280 to 90% kind of a return. So let's go down to the daily time frame and let's analyze how it is placed right now. So this was the long wick. Take a look at this. That was formed uh, back in back on September 16, and since then it fell from 980 990 rupees to 750 rupees. There it took support, and since then it has been rising consistently. So why took the support at that price around 750? That was because it was already a support region. As you can see here, this was the whole region where it took support again. And last time also when it was rising, it consolidated for some time back in March 2021, and after that it rise and again fell and again rise and again fell. So this was the whole region around this was the whole region around 730 to 750 rupees where it took support. And this time also when it fell from 980 rupees, again it took support at the same region, and after that it has been rising consistently since then. So this was our established resistance region, that was around 987 rupees from the price which from the zone of the price from which it fell back then. So this was the resistance that it crossed on that it crossed last week, not exactly last week, it crossed it today, as you can see here, this candle. So last week it gave an indication that it's ready for a breakout. Take a look at this, the long wide range candle, which is a very bullish sign, and look at the volumes. The volumes were 2-3x uh, from uh, from the past volumes. As you can see, the volumes were flat during this whole consolidation. Even during this fall, even during this whole fall, the volumes were, as you can see, very minimum. And take a look at these two volume bars and these two candles. So on Friday when it made this candle, this here, this wide range candle, look at the volume that day. The volume was around 2-3x from the previous day's volume. And today also it crossed, it opened above the resistance region and the volume was even higher. One thing that I don't like is the wick. As you can see here, this wick that it formed on the upper side, wick combined with volume, that is usually not a good sign. As you can see here, this wick formed with uh, a little bit volume, so that is usually not a good sign. But this wick is formed because the broader market was not in a very good mood and the whole market started falling, but it still closed above the resistance zone. That is a good thing. So next resistance would be this uh, wick's top, the top sorry the high level of this candle, that is around 1044 rupees. So this would act as a minor resistance, but looking at the momentum, a very nice consolidation right before the breakout. As you can see here, it was consolidating in a narrow range, and after that a long wide range candle combined with volume, and again a candle above the resistance zone. So the momentum is very positive, and uh, once it crosses this level of 1044 rupees, it can easily go up. So how much will it go up? How to derive the targets? For that, we're going to use the Fibonacci, and we're going to place the swing high and the swing low. The swing high of 16 September, the high point of that candle, and the low of this candle, which was formed at the support zone, big wide range red candle. So this would be our resistance. 1044 rupees would be our resistance, and this 1226, that is 1226 rupees, would be our first target price. So once it crosses this level of 1044, this would be our target. This would be a target, that is 1226. So this would be a target price once it crosses this level of 1044. When you know this momentum is strong and the stock is good and everything is right in place, uh, you don't have to wait for the breakout. What you can do is, what I usually do is take 25% position. Let's say I buy 25% of the original position that I've the amount of shares I want to buy. 25% of that I'll enter here, and if in case it goes down and hits my stop loss, then I'll be out with 25% quantity, and in case it breaks out, then I'll add again 25% quantity here if it breaks out. And if a breakout is good like this one, like it forms a big wide range candle with increased volume, then I might add the rest 75% position here. And that's how you can plan your trades well ahead of the move. So where should we place our stop loss? So the ideal stop loss in this case would be the low of this big wide range candle, that is around 930 rupees. And if you want to keep a little bit deeper stop loss, then this minus swing low, that is around 900 rupees, would be a good stop loss uh, for us. So in case if you buy around, like, let's suppose if you buy around 150 rupees and keep the stop loss at 900 rupees, and our target price would be 1226, so it is uh, 1:1 kind of a 1:11 kind of a risk reward. That is okay. But if you don't want to take that much risk, if you don't want that much deep stop loss, then the low of this candle would be fine, that is around 930 rupees. So let's move on to the second stock, and second stock we're going to discuss today is Max Healthcare. So there's not much to look at because it was listed back in August 2020. uh, yeah, August 2020, and since then it has been in a very nice uptrend, a very strong uptrend. So a few weeks back around this region, it faced some resistance. As you can see, a wide range candle with a long wick on the upper side, and after that two consecutive red candles, bearish candles, and after that again it tried to cross that level. As you can see, it again tried to cross this level of 399 rupees again, uh, but it failed. Like, it crossed this level, made a high of around 402 rupees, but didn't sustain, and after that it fell to around and made a low of around 320 rupees. So right now it is forming a kind of a saucer pattern, that is a cup without handle. You can call it cup without handle or a saucer pattern, and it's ready for a breakout because, as you can see here, look at the same concept, big wide range candle. Volumes are very low in this stock, so there's not much volume activity, but look at the volume is, sorry, not volume, look at the candle is very strong. Even the market fell today around 1%. Market fell today and it was up around 4.82%. Other hospital stocks were also down, but this stock was up today, as you can see here. So once it crosses this level, so our target would be, we're gonna use Fibonacci for that. So our target would be, if we use this swing high of 402 rupees and the swing low of 320 rupees, so our target comes around 450 rupees. So once it crosses this level, again the same logic, uh, you can buy 25% position here at this price, because you think the stock is ready for a breakout, and you can buy rest of the position after the breakout, or maybe you can buy 25% here, 25% after the breakout. And if in case the stock pulls back after the breakout, let's suppose it forms a big candle here and again one here, and after that it pulls back and retest this level of 402 rupees, so then you can again add the rest 50% position here, and if it doesn't hit your stop loss, and then it will most probably go back to the our original target price. So where should we keep our stop loss? Again, same logic. uh, a good stop loss would be around the low of this candle, that is around 380 rupees. That is roughly, if you buy it, let's say you buy it at 405 rupees and keep your stop loss around 380 rupees, so the risk reward comes around 1.84. that is a very nice risk reward ratio given the current environment of the market. So keep an eye on it, wait for the breakout. It can do something like that. Right now it's forming a saucer. Suppose in case it again faces a resistance and tomorrow starts falling, it can, maybe it will then turn into a cup and a handle pattern. So wait for the breakout. You can, if you're not take a risk, at 25% position right now and rest after the breakout or the pullback. So this was it for today, guys, and if you learned something and enjoyed the video, please consider hitting the like button and don't forget to subscribe and share. On every Monday I will uh, bring a new video on technical analysis, where we're gonna take a look at the stocks which are ready to give a short-term move. So before going, let's take a look at the stocks that we discussed in last two videos. So in the last videos we discussed a stock named Copran. So this was our original thesis. The stock gave a breakout, all-time high breakout of around 260 rupees, and our target price was around 300 rupees. uh, Sorry, 310. So the stock made a high of 304.80 rupees, that is very near our uh, the target price, and stock is still above the previous resistance of 260 rupees, and our stop loss was around 245 rupees. So it's still above the stop loss region, and if you booked the profit around this level of 305 rupees, then that's great. And let's go back to the another stock we discussed in the video, that is Alcan Engineering. The stock gave a Darvas box breakout, or you can call it a rectangle breakout or anything like that. I explained Darvas box theory in that video. So it gave this was our original thesis, and it gave a breakout, and we bought it around 183 rupees. It gave a breakout. After that, see the concept I was telling you about uh, in the max healthcare stock, that you buy 25% here, 25% after the breakout, and the rest 50% after the pullback. As you can see here, this is the perfect example of that. The stock broke out, but then it pulled back, and again after that a big wide range candle. Now it's consolidating above the previous resistance, that was around 183 rupees, and it's just consolidating. And once it crosses this level of 219, then it will reach a target price of 260 rupees. So that was it for today. If you learned something and enjoyed the video, please consider hitting the like button and don't forget to subscribe and share. Goodbye, take care.